Hello everyone, and a happy new year to you all, though I know it's mid-January now, so it's a few weeks into 2022. I'm Becca Rowland and I'm a partner at Midas Aviation, and I'm going to be hosting the webinar today. Thank you for joining us. This is part of OAG's series of webinars, which we've been running now monthly for 18 months or more, I think. Anyway, as this is the first webinar of 2022, we're going to be trying to look forward to what we can expect in the coming year. And specifically, we're going to be looking at some of those factors that need to change or keep improving for the aviation industry to continue its path to recovery. It's getting close to 2 years now of some of the most challenging times this industry's ever experienced. But we're still here and you're still there, and so we've so far proved that we're resilient and adaptable, we're innovative, and we're continually able to work towards creating air services that meet the changing needs of travellers. So let's have a look at how we can keep doing that in 2022. After a bit of a recap of 2021, we're going to be looking at 4 sort of factors that we see driving air travel over the next year. Vaccinations, which hopefully we'll see are really taking hold everywhere now. Frictionless borders, what does that mean in terms of people being able to travel internationally? All those restrictions we've been talking about over the last year, what's happening with them? Are they reducing? Are we going to see a bit more free travel? And then we're going to look at the state of airlines, what they've got to contend with at the moment, and then the travellers, how much disposable income they've got, have they got a will and an appetite to travel? As always, OAG will be making the slide deck and the webinar available afterwards, so there's no need to take notes, but please do ask questions using the chat function as we go. And myself and our guests will try and pick them up and answer your questions as we go through. And if we've got time at the end, we'll pick up a few more then. So please do keep your questions coming. So with me today, we've got John Grant, OAG's Chief Analyst, someone who's always got the latest numbers to hand. John puts out a blog every Monday for OAG with a roundup of the very latest in airline schedules. So do look out for that if you need to keep your finger on the pulse of airline schedules. John, good morning. Good day for you. Good result for the football last night, I gather.
Yeah, hi Becca. Yeah, great result. Mighty Seagulls nearly thrashed Chelsea. So the world is all bright and rosy in the household today.
Yeah, I'm sure I'm going to have to rein in the sporting conversation today and keep it to air traffic, aren't I? Because you're keen with your football, and then we've got our second guest is Matthew, who's in Australia, and there's been a bit of a cricket ding dong over the last few weeks, hasn't there? Welcome, Matthew.
Hey Becca, great to be on the call, and I'm glad to be talking about cricket rather than tennis.
So Matthew is a director for global markets at Ailevon Pacific Aviation Consulting. Has got loads of experience with aviation. You've joined us before, haven't you, Matthew?
Indeed, good to be back.
Yeah, good to have you. Good to have you with us. Yeah, we'll try not to talk about the tennis as well. Goodness me, that's been a bit of an episode for Australia, hasn't it?
Yeah, let's not dwell on that. I'll let you go forth.
Okay, let's dive into the first of our data points. John, we always start with you, and we always shake up the slides a bit. So we've got some slightly different looking slides to what we were showing you last year. But we start with global schedule capacity. On the left-hand side, we have 2019, 2020, and 2021. John, my takeaway from this is actually, even though as we reported through the year, all the bumps, the ups and downs, when we look at it, we had a year of progress. You know, there's steady recovery actually, and we're getting there, albeit slowly.
We are. It was always going to be a long journey to recovery, and you know that's proven to be the case. And clearly in November, the Omicron variant set us back a bit, but the industry and capacity has been moving forward. I think we need to distinguish though between capacity and demand. Demand, I think, is really sensitive at the moment. You know, we still haven't seen the corporate demand come back in any great strength in any market around the world, and leisure travelers are extremely nervous about booking too far in advance, given how quickly travel restrictions change, and we'll come on to that later. But I think if we're looking forward, Becca, this week we're down at about 76 million seats, and that's probably going to be the softest point during this first quarter if we do not get another variant outbreak. You know, looking ahead, there's a lot more capacity scheduled to come back in from the end of February, particularly in Western Europe and the United Kingdom. And if our esteemed Prime Minister can break himself away from a party at lunchtime, then he might release even more optimism into the UK market, with travel restrictions being eased from the end of January. So, yeah, we should look on the bright side of life, and let's not forget, you know, compared to 2020, we have made steady progress and are heading in the right direction. So, long way to go. Matthew will tell us, you know, Australia is still struggling to open. Made good progress in the last couple of months, but New Zealand is talking about, you know, still imposing more quarantine restrictions. So it's good, but we've got a lot of work to do, and we need to keep using these vaccines, and we need to get more consistency in rules and travel regulations for sure.
Matthew, can we bring you in at this point? Do you have a sort of perspective on where we're going to end up with sort of capacity and traffic over the year? Just sort of top line, what's your sense? Is it, I mean, if I extend these lines on the left-hand chart, the yellow one, it takes us to the end of 2022 to reach that sort of black line of where we were in 2019. So we still got, you know, as John said, quite a long way to go.
Yeah, look, and it looks quite linear, and this is the trick of seeing a global sort of snapshot, right? And I know later on in the slides you've got it there that it shows the different markets and how they've had ups and downs. And if you do look at you know, a vast majority of markets, it's not been linear. You know, a lot of these markets have had their ups and downs, and I guess, you know, through, you know, a global lens, you see it does look quite linear in its recovery, but we all know they've all been very different. Some markets have fared better than others. You know, China domestically for a long time there had some significant levels of growth through the latter part of 2020 and 2021, but of course, you know, with other sort of variants popping up, markets have closed and opened, and John's very right in regard to over the last 2 months Australia has begun to open again, but Omicron has, you know, set back some of those openings again, or made people more cautious. Just early in the week, in fact, we had a Roy Morgan consumer sentiment release, and it's the worst consumer confidence in 20 or 30 odd years. Quite a significant dent in the consumer confidence, and only a week prior, Qantas and Virgin reduced their schedule significantly. And so, you know, to John's point, capacity is very different to demand, and airlines are often, you know, precursors to where consumer confidence is, because of course consumers are taking money out of their pocket and spending with an airline. Now, if they're not doing that, of course, airlines react by reducing capacity. And so this linear graph, you know, with global scheduled capacity shows, you know, where airlines hope consumer demand will follow, but certainly it's not always been the case in every single market.
Yeah, we'll come on later to look at the capacity reductions we're seeing, because it looks like it's not just demand driven at this point in time, but that's a different story. John, you were going to add something.
Yeah, I was going to say, you know, I think what we really need to be aware of, Becca, is that many airlines are in a situation of great uncertainty at this moment in time. The Q1 position, we always know it's going to be the worst quarter of the year, but many airlines are struggling to understand what really is happening and how strong demand will be. You know, we know that, for instance, the half-term holidays in Western Europe, which will be the middle 2 weeks of February with the ski season, look like they're going to be very strong already. So the data can be slightly misleading. You know, let's not get hung up about the first month of the year. There will be another 11 months this year, and I'm sure most of those are going to be more positive than they were in 2021.
Yeah. Let's have a look at taking your point that these are global numbers, and so they hide an awful lot of bumps along the road at an individual country or destination level or city level. This is the yellow line here is the capacity that we've just seen back from the beginning of 2019, and then we've got origin destination passengers. So this is, we've had a question about where does what's the source of demand data. Well, traffic data here is from OAG's traffic analyzer. So, you know, we can see there's as we would expect, a gap between capacity and traffic. What do we know about demand going forward? What I'm hearing is that people are booking very late, aren't they? There is some package bookings taking place in advance because people have got protection about cancelling and so on, and maybe they want to get a booking while there's worrying that there may not be availability if they leave it later. But probably most bookings are happening a bit closer in, aren't they, than they used to?
They are, and the longer haul leisure markets, the traditional longer haul leisure markets, have a high proportion of travellers who are still holding on to vouchers that have to be booked and in some cases flown by the end of March or April of this year. So, you know, they may have booked into the summer, and the traditional July-August period will be very strong, particularly on those routes. I think the more short-term booking profile is more pronounced in the short-haul European markets and the regional markets in Asia and other points, for two factors really. One, they are short-haul journeys and people have got more flexibility. There's more frequency of service, and of course, you know, people are wary of new restrictions coming in, so you're not going to be booking a short-haul flight in Europe perhaps for May or June, unless you know you're going to a wedding and you expect the wedding to take place type of event. And that's another risk for airlines in all of their capacity and revenue management. This blurring of the booking profiles between what we used to know as a classic business and a classic leisure traveller. So it's a real gamble for airlines, and you know the risk that they've always taken on revenue management has actually heightened, and will probably stay with us for the next 12 months as demand settles back. Hopefully restrictions ease and we have more conventional booking profiles emerging in the systems.
Yeah. Great, thanks very much. Let's have a look at that bumpiness by country. So this is showing capacity versus the same month in 2019 for a range of some of the largest markets in the world. So we've got Australia down at the bottom there. You can easily see sort of where the big impact was of COVID-19 and how it's working its way through. A good number of these markets are now within 20% of where they were in 2019. So, but we do see the bumpiness, don't we? We see the sort of, you know, improvement and then getting a bit worse again. If we look at India, for instance, here back in June, you know, there was lots of improvement and then bump, you know, it's back down at 50% and then improvement again. So I guess this is the story we're just seeing played out in one market after another.
It is, and you know, in years, when we look back at this event and the pandemic, we'll point to this and see how quickly demand and capacity changed in some of these cases. Places like China, of course, that suddenly locked down 8 million people and closed the airports, and 10% of domestic capacity disappears overnight, of course, is interesting. Shows how powerful the authorities have been in trying to clamp down on COVID-19 in China, and with the Winter Olympics looming, of course, that's become even tougher and more restrictive. But if we look forward on this data you have here, Becca, we've got India at the moment where there's talk of another lockdown, reductions in capacity, a more regulated environment, with the authorities stepping in for reducing capacity. And Indigo dropped 18% of their seats compared to this time last week. So, you know, it's very, very fluid. It is dynamic, but sometimes we have to look at the trends, as I said in this week's blog, and the trend is towards more green. But we need to, of course, think that -20 in the depths of the pandemic, we were down at -70s and in some cases even -80% of normal capacity. But if we're down at -11 and we're down at -15 or whatever it happens to be, that's still 15% less capacity. We know there's less demand at the moment, particularly, as I said earlier, in the corporate sector. And we know that yields generally are lower than they have been for a number of years. So put those three ingredients into the cake and then add on top of that a 60+% increase in the price of fuel over the last 12 months. This is still a very challenging environment from airlines to make cash, and particularly those that are not fleet of foot, those that are encumbered with either high cost bases, unable to change their networks, reliant on sixth freedom traffic. All of those things we've pointed out before are still struggling to crawl out and away from COVID-19.
Right, we've just had a question just asking about the data here. So what do we mean by capacity? So what we've extracted here is capacity defined as departing seats from each of these countries. So departing domestic and departing international seats. So it's just departing seats for this particular chart. Let's split out domestic and international, really completely two-speed profile, isn't it? So in many cases that the domestic markets are doing relatively well. We've been saying that for some time now, haven't we? Matthew, looking at Australia, where are you at in Australia? I know there's been all sorts of restrictions between states, so Australia's been quite unusual in that sense, in that domestic travel's had that additional constraint. But is that, as we go forward, is this going to be a boom year for domestic travel in Australia?
Look, I think it's going to be in the medium term. Right now and into the next month, probably not. Just simply because there are still restrictions in place, and there's talk now of Western Australia possibly extending their opening. They've said they wouldn't, but you never know.
Western Australia is still closed?
Technically, yes, to a lot of all of the states and territories, except for very specific reasons as to why they should be allowed to travel or enter the state. So, we still have half the country, if you will, Western Australia, not open to the rest of the country. But there is an intention to still open. But I mean, to the earlier point, the global lens is very different here when you look at each one of these countries separately. It's certainly not linear, but the international component is very much constrained. But the point I wanted to make earlier, and we should think about or consider, is that there is all this pent-up demand in a lot of economies. There is a lot of growth in savings rates. So there is this pent-up desire to travel, whether it to be see family and friends or for leisure reasons, to escape your own current location for the first time in 2 years. So domestically, when there has been opportunities to travel, people have taken that chance. The challenge for airlines is that, of course, all these restrictions in place, and that's what airlines have been so clever at doing over the decades, is removing those restrictions over time, making it very seamless to travel through passport and border control, and we'll come to that later, won't we, Becca? But the point here is that these restrictions remain in place, and until they're removed, and until the barriers to travel are reduced to a point where it's, again, very easy to travel. And I know the US, for instance, is requiring only RAT tests soon to be used, or in fact was put in place last week, I can't remember. But the point is, a RAT test is very different to a PCR test. So of course that just makes things a bit more easier again for travellers to put in place plans to travel again. But having certainty around these schedules and around these rules becomes a key element, and also people planning. So I think that's a really important element. I think the other thing to keep mindful of, John, is when we're talking about, when we have our audience listening to us, the differences between the Northern Hemisphere and the Southern Hemisphere. So of course, Q1 right now used to be one of the most profitable times for Qantas and Air New Zealand and those in the South Pacific and Southern Hemisphere, South African Airlines, for instance, Airways. And so, I mean, the disappointment here is that, of course, the Tasman's closed, the Pacific is absolutely more or less closed, except for Fiji, and made worse now by this eruption in Tonga. So look, all these different markets represent, the nuances of the specific sort of challenges each one of these countries have in navigating the restrictions that have been put in place.
And I think to your point, Matt, I think we need to recognise that, particularly in the southern hemisphere, at this time of year, airlines are making their profits. Making their profits, and a lot of that profit in Asia comes off the international flying. It's great to see Vietnam domestic capacity coming back, but when they're selling fares for $18 US, however cheap your labour costs are, it's very, very difficult for that to be profitable. It's cash generative. You're paying your bills, etc., etc. But to be truly profitable, that's very, very difficult. And the frustration I think the airlines will have is there is going to be that moment of when everything flips, and there probably won't be enough international capacity in some markets for perhaps 2 or 3 months because demand will be so strong. But guessing when that's going to happen is the real question that people are trying to solve today.
Yeah, no, look, just to pick up on that point, Becca, look, I should add to John's point around the domestic flying. So if you can't fly internationally, right, there's a lot of domestic flying you could do between points that you may not have served in the past to try and soak up some of that demand that might be there, but also add to your revenues. Airlines are finding any pocket of revenue they can possibly tap, and so that's why in some markets, they have diverted aircraft away from international flying because they can't do it into domestic flying. Which when we come to it later, how many airlines can Australia sustain? We'll soon find out.
Well, let's talk about that now, because this is a good point to do that. So you're looking at 5 domestic airlines, aren't you, now in Australia? Is that, I think you and John have different views about whether that's sustainable.
Yeah, look, so Bonza has announced it'll start flying in calendar Q2 of this year. Not sure exactly when that'll be, of course, but they're being supported by 777 partners out of Florida, who also have investment already in the likes of Flair in Canada. And they've made the point that they're going to be very different to Qantas or Virgin or even Rex, and not focus on the Golden Triangle, Brisbane, Sydney, Melbourne flying, and instead, fly between point-to-point markets that have been served in the past or are underserved. And look, the argument here in Australia is that, this market's not big enough to support another carrier. Well, I'm in two minds at this point in time. Yes, there seems to be historical evidence that the market isn't big enough to sustain a new carrier. But if a carrier is absolutely committed to its business model of only flying low frequencies between standard points where there hasn't been direct service in the past between those 2 points, then there's every chance they could succeed. And right now is a good time to start an airline because the market is flush with individuals that have been let go by other airlines. And domestic flying is, as we just touched on, is where a lot of opportunities are existing because international is closed. So look, I'm sort of in the mind that they will have a very good go at it, and I think they'll be around for at least 2 to 3 years. I have no crystal ball beyond that. We've even seen Qantas, come to its knees in the last couple of years as well. So look, we can't really surmise as to who's going to survive and who's going to not survive. But I think in my mind, the market, if you're able to segment it enough, then there should be enough for those to succeed in every segment they choose to stick to well. Now, if you were going to try and repeat the model that Qantas has, then yes, you could come up against some significant barriers. There's only so many Gold Club members that you can find in one market. But I think in this instance, leisure markets, certainly in very mature markets like the US and North America, you know, they've boomed over the last 12, 18 months and even before then. So I think Australia is ready for another carrier. It's not happened to be a repeat of Qantas.
Yeah, it's interesting. I mean, all around the world, we've seen lots of new entrants and new startups, and it's a good
Becca,
time for innovation.
I hate to admit it, I'm probably slightly older than that, and slightly more cynical about the success of all five. You know, I completely agree. We've seen some very creative and interesting network development strategies in domestic markets in the last couple of months, and in the last 18 months, particularly in the US. And you know, we now have nearly as many airport pairs being operated now, if not more, than we did in January 2020 when COVID started. So,
Yep.
that's interesting.
That's been a trend forever, though, John, hasn't it? You know, more and more city pairs have been connected every year. It's
absolutely.
A bit like, you know, ASK growth since the 60s and 70s. It's been very linear in some respects, you know, but until the global pandemic, of course. But what has changed through the pandemic is ASKs have dropped significantly, but city pairs continue to grow.
Yeah,
so that's
because people are, you know, because of that creativity, and rather than doing 14 flights a week to a destination, people maybe are doing 1 and 3, and putting the medal on the ground and seeing what happens, and sucking and seeing. And as someone said to me, if you throw enough mud at a wall, some of it will stick, and you know, that's what's happened, and that's great. I just go back to the fact that over a time series, we have seen many markets, and interestingly, former UK colonial markets, Canada and Australia, have a very similar airline profile. When they get more than 3 carriers, the national carrier begins to either encroach on the territory of those smaller carriers and start replicating their network, or flying, you know, literally wingtip schedules with them, or the market just exhausts itself and dries up. I hope they all survive, and you know, it'd be great if they do. But
I think to Malcolm's point, though, this is a good time to experiment. You know,
there's no better time. I mean, if you can't find an aircraft and a crew at this moment in time, notwithstanding being sick with Omicron, you know, then you know, you would never find a crew, and slots are available, and all of those things that frequently are so difficult to overcome. But it will be a challenge for anyone. And maybe the plan is, you know what, someone said to me many years ago, begin with the end in mind. So maybe some of these carriers who have come into the market, right at the back somewhere, there is a piece of paper that says, ultimately, this is our exit strategy, and we will sell out to X, Y, or Z. These are businesses, they're not public service entities.
Very real.
Let's move on, because we could spend all day talking about Australia's domestic market. So moving on to some of those things that need to be put in place to get air travel moving more over the next year. We've talked a lot over particularly the last 6 months, about vaccinations. These numbers here are from our World in Data, which, you know, it's not quite the same way that every country measures this, but from this particular source, this shows the proportion of the population in each region that are wholly or partially vaccinated. So aside from Africa, which is really a long way behind, the more mature aviation markets, we're sort of getting there, aren't we, John? That there's a sort of a level of vaccination now. Is this a sort of tick? We've done that one. We can move on and focus on the other issues now.
Absolutely not a tick. You know, great news that we've got to these levels, but we are being told, and it seems that if you want to travel internationally, it's very likely that many countries will require you to have proof of valid vaccinations, and we're into a world of boosters, and you know, we'll probably need a booster in most markets again at some point in 2022, and it may be rolled up with flu vaccines, etc. But these are the sort of levels of vaccination we require to see on a consistent basis in these markets to continue to allow us to recover. And you know, when you look at Asia, Becca, and you say it's at 68.7% vaccinated, that's absolutely great. But if you were to then look at the fact that China is still essentially a domestic market with all of its borders closed, unless you turn up with a pair of ski goggles or a pair of ice skating boots and think you're going to compete in the Winter Olympics, you're not getting in and out of China as a tourist for probably the next 10 or 11 months. That country is going to be closed. So the vaccination rates are really positive. It's good news. We're getting there. We can't forget Africa, though. We need to focus on Africa and how we can get more vaccinations into, what is some of the least populated regions of the world, and not just once, but get that double vaccination.
And some of the most populated as well. I mean, some of these,
absolutely. Yeah.
And
there is a challenge, and in markets like Nigeria, of course, we hear that people are not getting vaccinated, and we hear that vaccine supplies are arriving with short shelf lives. So lots of work to be done there. But if we compare this to 12 months ago, clearly it's a much better picture.
Yeah. I mean, it's massive progress, isn't it, over the course of a year, really, and credit to all those involved with the vaccine rollout. We're going to look at some different data now, and bear with me for this slightly busy chart here. I'm not really looking for anybody to take much away from this, other than that it's very busy. So part of the University of Oxford has created last year, the Stringency Index, which is a way of wrapping up all the different restrictions that are in place in different countries. So that includes school closures or workplace closures and travel bans. And they assign a value of 0 to 100 and then track how that changes over time. So what this shows is, for each of these countries listed, massive amount of change in restrictions. They're, the rules change continually, they come and go, they get worse, they get more restrictive, more lax. So we wanted to show you that, but the real point of doing that was that we took that away and said, well, how many changes in the Stringency Index were there for each country? And these tables here, for the sort of 3 world regions, take some of the countries and we just say how many changes took place. And I think in a way it was no surprise, was it, John? But in some ways it's quite shocking to think that Australia had 44 changes, the UK 43. So every time, even if it's a school closure change, it's something that affects the environment that potential travellers have to contend with. And a lot of those are travel restriction changes. So just the enormity of what the industry's had to deal with in terms of rule changes.
It's shocking, Becca. And the industry is at the end of a very long stick of changes in regulations and requirements. And if you were to take Sri Lanka, for example, where they have 46 changes, and then you look at what Sri Lanka's major source markets are, and that would be places like India and the United Kingdom and Southeast Asia, then all of those countries have multiple changes as well. And it's the square root of the 2 minus 1 sort of calculation. It's impossible for airlines, it's impossible for check-in agents, for ground handlers, for GDS systems, for immigration control authorities to be up to date with everything that is going on in the world on a country by country basis. And it must be so complex for travelers who are looking to get anywhere in the world. I mean, I have a great example myself. I'm traveling to the Middle East this weekend. I've had to download an app, but I can't complete the app until I actually arrive in country with the last piece of detail. And that makes me think, well, will I actually travel? Will that work? I have no guarantee it will work. It is so. Sorry?
You're a seasoned traveller. Imagine, Joe Bloggs on the street trying to navigate that sort of.
Well, Matt, I'm seasoned and old, so I know it all apparently. But it's really difficult. And on top of this, in Australia, for example, you have every state, and we're not going to talk tennis, who has their own rules and regulations on top of the government's rules and regulations, don't you, Matt? It's impossible to know where you should be and when.
Yeah, look, absolutely correct. And even during, the latter part of 2020 and into 2021, we had a matrix that sort of summarised what the restrictions were between Australia, New Zealand, and the different states and territories in Australia, and travel between across the Tasman. And we had a traffic light system to try and provide our clients with guidance of who can travel and where and that sort of thing. And it just kept changing. And then towards the beginning of 2021, we had to give it away because there was just too many changes. There was traffic light systems in a state, or there was different phases or whatever it was. It just becomes incredibly difficult to navigate.
And if you're buying a ticket, what is the airline going to do if you fail your PCR test the day before travel? Can you change your book? Will you get a refund? What's going to happen? How do you go about that? Airline call centers are swamped. It takes 2.5 to 3 hours quite frequently to get through to an airline call center. You can't do these things online. System doesn't compute and all of these things. It's a really frustrating situation. I mean, when we're talking about 47 and 46 changes during the course of this, that is essentially one every 2 weeks, isn't it? Let the people who are making these rules have a couple of weeks off for holiday, and it's one every 2 weeks.
Yeah. And of course, what it does, it creates uncertainty, and that's what consumers don't like. It's what businesses don't like. It's what airlines don't like. It makes it very difficult to plan. And of course, when you're traveling, you need to plan.
Yeah. So our next slide, I tried to look at some of the schemes that have been put in place that we were hearing about perhaps more 6 months ago. The IATA Travel Pass, Verifly. I think you've used Verifly, haven't you, John? Common Pass. We've got EU digital COVID certificates. We've got an IBM digital health pass that's working with Amadeus. Lots of different schemes. And I know, I'm sure last summer in one of the webinars in sort of June, we were talking about the IATA Travel Pass, being in place. And these things aren't, I'm not hearing travellers talking about these as the solution. And I guess, we've got airlines trialling them.
They are another layer of complexity, because when you make a booking with an airline 7 or 14 days before you travel, they start sending you text messages saying make sure you enter your details into the travel pass or into Verifly or whatever it happens to be. Now, to Matt's point, a leisure traveller, and let's remember, part of the recovery has been in the leisure market, and particularly in the VFR market, and particularly amongst perhaps those who have got a bit more income and want to go and see their grandchildren, who perhaps are not as technically savvy as some other people. And they're wandering around airports saying, what is IATA Travel Pass? What is Verifly? How do I do that? How do I link this to that? It is a mess. And Rodolfo's asked a bit of a rhetorical question. Where is the European Union, UN, ICAO, IATA, ACI, and the World Health Organization and all of this? Well, the answers, of course, are Brussels, New York, Montreal, Geneva. But they haven't really got their act together at all in providing a common platform. And it is so difficult to work your way through this minefield. And what you're showing here is airlines who have subscribed to the Travel Pass and to Verifly. Last week, nearly 800 airlines filed schedules to be operated with in the OAG database. Nearly 800, and you've got less than 10% of them here, Becca. So what are the others doing? How are they managing this? And the interesting thing is, you have very few low-cost airlines in here. And the ones who've been most successful in the recovery are the low-cost airlines, because they found their own solutions, even if it's a piece of paper that just says you're fit to fly.
Yeah, challenging, isn't it? I'm sure we'll come back to that later in the year. Let's move on and talk about airlines themselves. I know we've talked about airlines quite a bit. They start 2022 in quite for all that there's startups and those sorts of things, a lot of challenges, aren't there? We're seeing schedules change. Still, we haven't seen the volatility we were seeing, though this month, as we'll come on to, there's been quite a lot of schedule change with airlines taking capacity out for the next month, certainly. Airlines are carrying a large amount of debt as they go into 2022. The stimulus packages are ending. Omicron is causing very real levels of staff sickness, which is where the schedules are having to be adapted. We've got the fuel price, the highest that it's been in quite some time. This is going to be more hard times for the airlines, isn't it, navigating this?
Oh, it's a slog, I mean, in the Northern Hemisphere, we're seeing, an extra two minutes of daylight every week at the moment, or something like that, as we head towards summertime. And airlines can't wait for the summer. They are in the darkest places as we are. I mean, I think Monday was described as the worst day for people in the Northern Hemisphere. So it's really, really difficult for airlines. They would have had all of these challenges front, mind and center of their planning in November and December. The first quarter is notorious. And then to put another layer on top of that with Omicron and staff sickness has just blown them away in some cases. They really have had to work very hard to get their schedules sorted. And many carriers, all of the capacity we're seeing coming out is as much about we don't have people, or we can't guarantee people are going to be rostered or fit to fly.
I was talking to an airline on Monday who was saying, I think they were just having to cancel flights at short notice because they didn't have enough crew. So then the decision is made, let's take capacity out for the next 4 weeks or 6 weeks or whatever until Omicron's passed, so that they know they can operate a schedule with a reduced number of staff. So we think that's what we're seeing across the board. So the capacity reductions we're seeing now are not necessarily demand driven. They're about just being able to crew flights. And
well, they are. And I mean, we've got ourselves in a terrible mess in Europe. Where the EU has applied different slot use it and lose it or use it rules this winter. So, there's been lots of press coverage about some airlines having to fly ghost flights so they maintain those slots. Well, actually, they're having to fly those services with crews that, are fit to fly, that could in other cases be operating more commercial revenue generating services through the rest of the week. So we've got ourselves in such a terrible mess in Europe. Matt, what's happening down there? Are you seeing many cancellations because of crew availability and resources, or is it not so damaging?
Yeah, no, we were, and when I say we were, about a week ago or 2 weeks ago, I should say, there were significant impacts through the New Year period where people were considered close contacts, and of course, as borders began to come down and restrictions on travel between different states permitted, there were a lot of crews that were found to be in close contact, and of course, they changed the rules to ensure that there was a better way in which to classify people as, and to sort of safely assume, the safety of each person who came in close contact with someone who had COVID, and they also have pump primed the market with rapid antigen tests, and so until more recently, only in the last sort of, well, I think it's only 4 or 6 weeks or so, those tests have actually become readily available to the public to purchase. And I know in the UK, my sister living in London, she's had them, she's had boxes of them at home. So, it's a very different sort of story down here down under. And I know in New Zealand, for instance, it's very difficult to get hold of a rat test. And I can't speak for the Pacific nations or some of the clients there that we have. But in different nations, having access to readily available tests has become a real significant challenge. But then once they are available and people have guidance on, whether you should be isolating or not, has enabled schedules to come back to some sort of normality. But of course, with this wave Omicron that's sort of circulating widely within the 3 largest states, or most states and territories in Australia now, people are just a little bit more cautious. So, people aren't making those bookings, and perhaps the consumer confidence that I mentioned earlier does reflect on the fact that people are being more cautious about their behaviours and trying to accommodate COVID now, which is in our societies.
I think, Becca, if there are crumbs of comfort that we can take away from the Omicron variant, then if we look at Western Europe, and every market does have its own unique characteristics, it is very clear that the rate of infection has fallen very rapidly, almost as quickly as which it originated in November and December. And many parts of Western Europe are now beginning to think they're through the worst of the Omicron variant, and that actually that would be good news, because we'll have more herd immunity and we will perhaps transition to an endemic situation rather than a pandemic. It could equally be, of course, that so many people are still at parties that have been sanctioned by the government that they haven't remembered to do their lateral flow test. And I think people are, to Matt's point, you're welcome to the lateral flow test, Matt, because I think we have wear out in the UK, certainly, of doing one every day. There's only so many of those moments you want to stick the cotton wool bud down the back of your throat.
Yeah.
Okay, let's move on. But thank you very much. It's really interesting times. We just thought we'd have a quick look at the fuel price, really just to show what's happened to it. So this is where we are now, as high as it's been for a few years now. I think as the previous slide said, Moody's is expecting it to stick at around the 2018 level for much of this year. So challenging for airlines for sure.
It is, Becca. I think the challenge is to the point that we were saying earlier about, this is the price, or there is an expectation that the price, the average for 2022 will be around 2018's level, which was extremely profitable for the airline industry, and it was, but the conditions in which we operate are very different. The high yield corporate last minute booking traveller is not there. Demand generally is suppressed. We're not driving productivity on aircraft like we used to. Utilization is down in most fleets, etc., etc. If this variable goes back to what it was in 2018, then that's fine. We know what we've got. Some airlines will be able to buy forward and hedge, but for many it will still be too high for them to make a profit. And when we know that the margins and return on investments generally are really low in this industry, this is something, as Matt said out earlier, it's outside of their control. They're a customer. They have to live with this price.
Yeah. So one of the other things that the airlines have to face in 2022, many have aircraft that are due to be delivered in this next year. I took this data from the CAPA database and just shows some airlines with the aircraft that they're due for delivery over the course of the next 12 months. The blue ones of different shades of blue are shorter haul aircraft, and the yellowy orange ones are longer haul aircraft. So interesting, isn't it, just how many aircraft are in an environment where we're still operating with less capacity than we used to. We have all this new capacity coming on stream. Obviously some of it's replacing older aircraft, and these will be more fuel efficient, and they'll enable the airlines to control costs better. But it's a lot of aircraft, isn't it, John?
It is, but every year is a lot of aircraft, and there's even more aircraft been ordered during 2021. Lots of these are, fleet replacements, or were originally fleet replacements, and new generation aircraft, particularly carriers like United, and obviously the Chinese carriers were all given gifts by the government in recent years of more wide-bodied capacity. They're probably wondering where they're going to use that, on what domestic flights they can use a 777 on a regular basis. So yeah, the industry is still vibrant. We haven't learnt to fly on our own in the last 2 years. We need to use these pieces of metal, and they are a necessary part of the industry. So no great surprises. Obviously Southwest and Ryanair, right up at the top. They're both taking an aircraft a week, brand new aircraft. And
to what extent are these replacing existing aircraft? Is this part of becoming more fuel efficient, more better with carbon emissions, or are these Is that what?
Part of it is, but part of it is, you know, the relentless expansion of these airlines and the fact that they are, you know, they need to buy these aircraft and lease these aircraft in at introductory rates, essentially, so they can keep their average aircraft lease rate as low as possible. So for Ryanair, it will be about expansion. Some airport in some part of Europe that, you know, wakes up will suddenly see a representative from Ryanair saying, we want to fly from your airport, give us a couple of €100,000. And we'll make it happen. And similarly, you know, the same in other markets. You look at someone like, as I mentioned, the Chinese carriers, lots of capacity still going in there. Singapore Airlines with quite a bit of fleet renewal. British Airways taking a large number of 350s and 787s this year by their standards. I mean, for BA, that works out at 1 every 6 weeks. So a lot of work going on. And, you know, the industry will continue to evolve and grow. And it's nice to see the 380 coming back. Matt, I think even Qantas have put the 380 back on just for you, haven't they?
They have indeed, and I'm actually looking to go to the States next month. Not on Qantas. You know, I will say I've got a ticket price half the price of what they quoted to me, $12,000 return in Australian dollars. That's quite a lot of money, I would have thought, in anyone's currency. Wow. The other interesting thing about looking at these charts, and you sort of think about some of these things, you know, the aircraft you mentioned for British Airways, for instance, you know, they are replacing fleet that had seats that might have had, you know, 50, 60, you know, 80, 100, 150 seats more per aircraft. You know, I'm thinking the 747s, they've, you know, dropped, and the 777s, they've dropped, and now they're replacing them with these, you know, A350s and 787s. You know, the seat count per aircraft in the wide body market is reducing over time. And
yeah, that's a really good point. Yeah.
Frequency is increasing, right? So, you know, rather than going once a day, you can go twice. But the other thing about this, and I think this is to your comment before, John, you know, the dark blue and the light blue in this chart represents, you know, a smaller gauge of aircraft, and they're flying them point to point between, you know, unserved markets. Didn't I say before about Bonza, right? That's what they're going to do in Australia. So look, you know, a lot of this is about, you know, connecting these smaller markets, and maybe this is how some of these airlines will navigate through this fuel challenge they've got ahead of them. You know, the CEO at Delta a couple of years ago said, you know, what would he fear more, you know, a rising oil price market or a declining, you know, demand market? And he said, I'll take oil any day, you know, because it's so difficult to stimulate demand, and when consumers, you know, don't want to travel.
Says the man who owns an oil well in the Gulf, though, Matt.
Yeah, exactly. Yeah, no, I think it's an interesting chart, you know, with the large number of smaller aircraft that are coming into the market in due course.
Yeah.
Becca, what we haven't touched upon in all of this is what's going to be inside these pieces of metal. You know,
that's the more exciting bit, right? You and I can, you know, we love this sort of stuff, right? But once we get in the aircraft, what does it look like then?
Yeah, and we can have a whole conversation about premium economy here, but I'm gonna move us on.
Yeah, I mean, first class in most markets, and you know, unless you're in the US or China, where you get a superior quality of peanut in the US and a slightly denser noodle in China, first class is gone, isn't it? I mean, it's history.
Yeah. Okay, we've got 2 more slides I want to have a quick look at, if we can, before we wrap up. We've talked quite a bit about the capacity reductions that we're seeing in the first quarter. So we've put those into a couple of charts here. At the top, we've got some Asia Pacific carriers, and below that, I've got some specifically Chinese carriers, just showing how the capacity has changed between the last week of December and this week. So the OAG schedule gets updated each week, and so on a Monday we can take a new snapshot of what it's looking like. So this compares the snapshot from the 27th of December with a snapshot on Monday this week. And what we can see is that for January, for February, and for March, there are reductions in capacity, some quite sizable. But as we said before, our our sense is that this is more about dealing with Omicron and staff sickness than it is about responding to weak demand in the first quarter.
Yeah, absolutely.
And that's what we're hearing from the airlines, isn't it? From people
all around the world. Statements from Delta yesterday and the CEO saying, it was a helicron for them, and they just lost control of it. There's nothing they could do about it. And it's just so frustrating for every airline. I think, my complete sympathy at the moment is with Cathay Pacific and the management team at Cathay and the employees and all of the people who've worked there for many years. They are living a real life hell experience at the moment in terms of a business that has just been decimated and has got nowhere to turn. It is just so frustrating for them, I think, and every airline around the world has, as I said, has got to deal with this variant at the same time as all of the normal first quarter issues that we have. Becca, hi, are you there?
Hi, sorry, I'm having a problem with my internet now. It's the first time in 18 months that's happened. Can you hear me, John?
Are you back?
I just lost you for a moment there. Okay, let me move on to the final slide, and then if I lose you again, then at least I can leave you to wrap up. We thought we should take a quick look as well at airports. We've talked a lot about airlines. This chart here just shows a number of leading airports in Asia Pacific, and it shows the proportion of capacity in 2021 on the right there. I'm sorry, I should say 2021. What was domestic, what was intra-regional, what was other international, and it shows on the left the 2019. So I think the sense was that airports that had a lot more domestic traffic or capacity have been a bit more resilient over the past 18 months. That's no surprise, but we just want to put it into a chart. John, any comments on airports?
Well, no, I mean, just precisely to your point, Becca, I mean, we knew this, and it's been reinforced in the last couple of weeks as well. Domestic markets, those airports have been extremely fortuitous, but they don't buy bottles of gin and they don't buy tax-free goods generally. So although airports are still seeing the throughput and the footfall, the revenue per passenger is probably way down on what it used to be, and the commercial incomes are less. So it's not been the greatest situation for them as well. I think one of the ones that I think is a standout and hopefully will bounce back is somewhere such as Kuala Lumpur, where it had a great mix of domestic, intra-regional and long haul in 2019, and you look at it now and it's probably 20% of what it was, but with some good signs for later on in the year. And similarly, Narita and Haneda. I think Narita will have some really interesting challenges in the recovery because airlines are migrating to Haneda. There are slots that became available in 2020 that airlines have yet to fully utilize, and when they do, we'll see less international flying at Narita. So that will be problematic for them. And it would be great if we could see a bit more green and a bit more yellow on places like Shanghai, Beijing, and Guangzhou. I mean, Guangzhou is 100%, nearly 100% domestic flying at the moment.
Yeah. What about in Australia, Matthew? How are the airports faring? Are they? I don't know. I don't get a sense that there's been as much support financially for airports over the last year.
No, there hasn't, Becca, internationally and also domestically. A lot of airports didn't get a lot of assistance at all compared to the airlines. So, they have done it pretty tough. And of course, on top of that, there's been restrictions with travel internationally, which is, John's just pointed out, hasn't been able to be monetized insofar as the transactional value of international travelers, splashing the cash on liquor or tobacco or whatever it might be, perfumes or other goods that airports have come to really value. So it's been a really difficult time, but of course, difficult times has also proven to be an opportunity. So of course, Sydney right now is in the middle of course, being acquired by private equity. So that's at almost a full price of what it was pre COVID, and that's an opportunity equity investors have taken. But nevertheless, there is, as John said, there are green shoots there, and so there is the prospect of being able to have airlines return. But in some cases, they just won't come back. And I see there's a question in the chat there, Becca, you might have got to eventually, but I'll just answer it really quickly now about Brisbane. They've got a new crew of people there, relatively speaking, new, not all of them, but some new leadership there in the team. And I know they'll be very keen to ensure their catchment are well served. They've got some good advice, hopefully coming on board. And they will, ensure that no other carrier, they've had Hawaiian announce late last week that they won't return to Brisbane immediately, which has left the door open, of course, but they will need to work equally as hard as every other airport around the country to retain the service they've got through 2020 and 2021, and then build back better on the traffic they had in 2019. And I think that's a focus for a lot of airports, because at the end of the day, it's what drives the value in their business.
And Matt, I think you're absolutely right. No airport anywhere in the world can be complacent about, what, just because they had it in 2019 doesn't mean you're going to get it back in 2020, 22. And every airport in the world has opportunities for network expansion by, airlines being in a situation where they will consider anything, they will experiment with things that they used to think were outrageous, silly, but actually will work. And those airports that are proactive, get out there, get stakeholder community engagement, and work with the public and private sectors, could have some really great success in the coming years.
Yeah, agree.
Things won't be the same.
Yeah, no, absolutely agree in that respect. And so those who are proactive will benefit. We lost Becca again, have we?
Yeah, it looks like Becca's gone. So if Becca's gone, let's just close this up.
No, I was on mute. I'm sorry, I was on mute. I've been messaging in the background. Thank you very much, both of you. That's it's really interesting. Really good. It's not all negative. There's a mix there. Obviously, we're going to have a challenging year ahead. We'll be back on Wednesday, the 16th of February for the next webinar. So please do sign up and join us then. Thank you very much, Matthew, for joining us today. I know it's quite late for you in the evening. So appreciate your time today.
Pleasure. Great to hear from you again.
Yeah,
good.
Thanks, man. Good to see you.
Thanks, John.
Yeah, take care.
Pleasure.
Thanks, everyone.
Thank you, everyone, for joining us. Bye then.